Hey, good afternoon, everybody. Good afternoon. Hope all is well to everybody. Hope all is well. Listen, happy Sunday. Happy Sunday. I'm doing this live today, right? Because the past few days, I've been going back and forth with a individual on TikTok, right? And the reason, I've been in business now for roughly 17 years. 17 years I've been in business. And I've seen a lot of agents come and go, right? I've seen a lot of bad agents in the industry. I've seen a lot of agents, give bad intel. I've seen a lot of agents do like some messed up crooked stuff. So I'm going back and forth on TikTok with this young lady who I can guess that she is give me 1 second, guys. This young lady, I'm willing to bet I know what company, that she is a part of, because based on her ideas or ideals, right? It's pretty much buy term and invest the difference. And I'm not gonna name the company's name, but some of y'all who are watching who are agents in the industry, you know who I'm talking about, right? And she's, here's the deal. As an agent, whatever you feel as though, work for you and your market, great, you do that, right? But here's my issue. I think it's if you're a client, you're watching this, it should be very suspicious, if you have an agent that only works for one particular company, because there's so many different things out here. But if that agent is only working for one company and they're coming to you to sell you that one company, and I'm not saying that's a bad thing. There are great companies out here. And what I mean by one company is if that one company only offers one thing. So you could work for one company and that company offers a plethora of things, right, for you to be able to choose from as a consumer. But when the agent only works for one company that only sells one thing, I don't know if that's a good look, right? So I'm listening to this young lady, go on social media and talking about how bad the IUL is and why you shouldn't get the IUL. And some of you who are watching this, if you don't know what the IUL is, it's pretty much a index universal life insurance policy. It's an index universal life policy. And just to give you let me just give you a quick understanding of the term policy and then the IUL. A term policy is pretty much a policy that you purchase it, you die, they pay. That's pretty much the essence of it all. And it only lasts you for a specific time frame, whether it's 10 years, 15 years, 20 years, or 30 years. Whatever it is that you purchase is what you get. But term policy is not permanent. So after that time frame is over, you have to most likely reapply. You understand? Or if you don't reapply, your premiums start to go up excessively. So for example, let's say an individual is 30 years old, right? An individual is 30 years old. And let's say they have a house, they got children, they got a spouse, right? And let's say they purchase a $1 million term policy for 30 years, right? And that policy may cost them, let's say, I don't know, $89, $90, who knows, right? Now they pay that premium all the way to the age of 60 because it's a 30-year policy that they purchased. After 60, for them to keep that policy going, that 100 or that 80 something dollars, that $100 that they're paying, now possibly is going to be about $300-400 a month. And the following year is going to increase again. The following year is going to increase again. So the only other option that they're gonna have is, okay, let me cancel this policy and now reapply for a new term policy. Or hopefully by that time they realize that, hey, this term thing didn't work, so let me look into a permanent policy. But the problem that you're gonna find with that is you're 30 years old, you're strong, you're young, you're vibrant, you're healthy, right? You might get a preferred rating, preferred elite rating. When you're sick, now you're 60. That 30-year period, anything could have happened to you health-wise. Anything could have happened to you health-wise. You could have had a stroke. You could have became a diabetic. You now could possibly have a high blood pressure, high cholesterol. You could have put on 50 pounds to 100 pounds. I had a client years ago, young lady, when I wrote her policy, and I believe this was my second year in the business, right? She was pretty much in physical shape, like real good physical shape. And probably no more than, she's probably no more than 5'4", 130, 140 at best. Fast forward 10 years later, she had children, right? And she now is weighing 200 and something pounds. Okay, also have high blood pressure. And we're trying to get her additional coverage. And the premium was kind of high. So that's the problem with the term policy is, yes, it's cheap. So you buy it. Most people buy it because it's cheap. But I always tell people, cheap is not always the best route to go. Especially when it comes to these parts. I don't know how many clients that I done, probably in the past 2 years or so. And most recent, actually, one of my clients referred me to their parent that their term is about to terminate. They had term policy for 30 years. And they got a letter from the insurance company that the policy is now going to become what's called annually renewable, which means the premium is going to renew every single year. And the price went up dramatically. And the father was not willing to pay that price. So the daughter connected with the dad. You understand? So we end up doing a significantly less policy for him, but it was a IUL policy that we did for this gentleman, right? So because again, he's much older. Okay, he also had a he had a heart attack, I believe 9-10 years, mild one, nothing dramatic, but 9-10 years ago. So these are things that becomes a factor, right? So that's the term. Okay, it's a time frame you have it for. After that, it's done. Cool. Then you have a whole life or a index universal life policy. Okay. Now, what is the benefit of those? Number one, it's a permanent policy. It would take you, in most cases, if designed properly, because what I'm going to talk about too in a minute is some of these agents who are just out here just to make, some of these agents should not be writing IULs without their managers or without somebody who's experienced, to be honest with you. You understand? So, for example, when I started the business, I was with my manager for at least almost 2 years. That was on purpose though, because typically training is about 90 days. But every time I had an appointment, I asked her to go with me. Okay, because I want to make sure I was doing the right thing for the client. At the same time, every appointment, I usually have my notepad and I'm taking a bunch of notes. And we'll wrap up the day. We'll go back to the office, during the evening. I say, hey, why did you say this when the client said that? Why did you position them in this position? And so over the years, I learned so much. But you have these agents now who the managers are unwilling to train them. They tell them to go buy some leads and they just throw them out there and tell them to figure it out. And that's why you hear bad stories of whole life and index universal life and things like that, because they're not structured properly at all. Okay? But this young lady is going and telling people index universal life is a ripoff and you shouldn't do it. The fees, right? And I'm messaging this young lady back and forth because I'm trying to save her. She doesn't even know what I'm trying to do right now. I'm trying to save her because I know the company that she works for, they sell one product and one product only. And not only do they sell that one product is the most expensive term in the entire United States, right? So I'm like, listen, if you don't like the IUL, that's fine. Market your product, but don't go on social media and talking about how bad a product is that it works for so many people. Let me tell you why I love the IUL so much. And again, it's not for everybody. Like I market, when I sit down with a client, I find out what your needs are. I go over budget. Everybody's not going to an IUL. I may have to start you off with a term, with a strategy for 5 years or so. Like, okay, 5 years from now, every year I will sit down with you. Hey, you get a new job? Did your income get better? Did anything happen in your life? Every year we do an annual review, and then when that time comes, we'll change you over. But we may start you off temporarily right now, with a term. So everybody shouldn't go into an IUL. But the benefit of having an IUL or whole life policy or permanent policy is it lasts you at least well over age 100. Again, if structured properly, which means, and I know a lot of agents use the word structured properly, and they don't even explain what that means. Simply put, there's 3 ways you can write a policy when it's an IUL. You got minimum contribution, which you never want to put a client in. Okay, minimum is only there for in the event that, let's say, a client lose their job. Let's say a client is going through some financial difficulties and they want to now go back to a minimum, or they want to keep their policy, but they can't afford it. So now they can allow you to pay a minimum contribution. That's really what minimum is for. But I know a lot of agents, just to make a sale, they will write that minimum stuff, which is crazy. Okay, so this is why I say most agents shouldn't go out with especially if they're going to write an IUL. They shouldn't be touching the IUL until at least 1 year or so with a manager overseeing that application, helping them with that application, right? But there's massive benefits with the IUL. One is, again, the premium is fixed, okay? And that policy will last you all the way to age 100. But another benefit that, and these companies who write term policy, they get this so wrong all the time because, again, they don't know how the product works. With these whole life and IULs, you can contribute up to a certain amount of time, and after that, you don't have to make no more premium payments. So, for example, just like a term, if you buy IUL at 30 and you contribute all the way to the age of 60, after 60, you no longer have to make any more contribution because now you have a massive amount of cash value in there, and because of the power of compounding interest, okay, that policy now starts to self-fund itself. While at the same time, you can start to pull out income stream from the policy. You understand? So to me, I look at it this way. Because these companies, they tell you buy a term and invest the difference. Well, we know that most people don't invest the difference. You understand? They don't put that money to the side. They spend it. Okay? But let's just say, let's assume that they did spend the money. Because they did invest the money. Let's assume they invest the money. This is the question I always ask these term promoting individuals, right? I buy term at age 30 and now get all the way to age 60. You tell me that I shouldn't need insurance anymore because if I invested properly, I now should be self-insured. Okay, let's play that game. So I buy term for 30 years. Okay, I have $1 million term because I have responsibility. I got a mortgage, I got kids, I got a spouse, right? I get $1 million policy. Now I get to age 60. My term is done. I could cancel it. At the same time, I have $1 million in investment, whether it's a mutual fund or an IRA, right? Now, here's the problem with that I was asking them. That $1 million, is that money for me to live off of, or that's money for my family when I die? It's like, well, that's money for you to live off of. live up or okay, no problem. So now I'm 60. Let's say I live all the way to age 85. Okay? Most likely, when you factor in taxes coming out of that money, I'm probably going to deplete that money. So now I end up dying and leaving my family with nothing. And they never have nothing to say when I ask them that question. They never have nothing to say when I ask them that question. Right? Because to me it's a legitimate question. And again, this is where that IUL to me makes sense. Because if you buy $1 million IUL, for example, you fund it from age 30 all the way to age 60. Same scenario. You now have $1 million inside the IUL. You're now taking out distribution in retirement. Okay? Now you pass away at age 85. Okay? Guess what happens? You pass away at 85, your family gets $1 million policy still. Compared to the other scenario where they tell you, okay, you shouldn't need life insurance anymore because now you're self-insured. Right? So now you're self-insured. But to me, you're self-insured, but that money you're dipping into to live off of. So now when you pass, your family don't get anything at all. Right? So this is why I say, like, you got to be careful what agents you guys listen to. You know? So I'm going back and forth with her on social media, right? And I said, listen, if the IUL is as bad as you say it is, then how come year over year is breaking records in reference to premiums coming in? Okay, last year I believe the IUL hit $3.8 billion in premium in 1 year last year. That's a new record. Okay, on top of that, the amount of sales that came in was also a new record. And the first IUL that was sold was in 1997. 1997 was the first IUL that was sold. So we're talking about 30-year plus of a product being out there in the market. And you're getting on social media talking about how bad this product is. Well, if it's that bad, how come the government hasn't stopped the insurance company from marketing this product? She goes on and on about fees. After all, everything that's a financial product in America has fees. Your bank account has fees. CDs have fees. Your mortgage have fees. Stocks have massive fees. You understand? For your 401k have fees. Everything that's an investment in America has fees because it's a scenario where everybody should win. The investor wins, right? You're investing in something to get something back, so you're winning. The people who you're investing with, they have to win too because they're taking a risk also. So it's a give and take in a way. So everything has fees. To have a bank account, it's fees. Because the bank has to stay in business so that way you can have somewhere to put your money. So listen, a lot of these people, I feel bad for them because, you know, like they get on here, and this is why I get mad because, you know, everybody don't need a mic. I'm sorry, everybody don't need a mic. You understand? But everybody get on social media. Everybody get on social media and have something to say, and most of the time it's highly inaccurate. Most of the time it's highly inaccurate. Okay? Now, another thing that I like about the IUL is this. They have living benefits, right? And living benefits kind of work like long-term care in a way. Okay? Most people are going to need long-term care, some form of long-term care around age 66 and above. Okay? Again, if we paint the scenario of buying a term policy, If I'm 30 years old and I buy a term policy, and now that term policy terminates at the age of 60, but I have $1 million in investment money, and God forbid now at 66, some health situation happen where I need to go into an assisted living situation. Every state is different, but in the state of Maryland, assisted living is about $110,000 a year. Where's that money coming from? My investment that I have, correct? Because I no longer have their insurance anymore, because you told me as my agent, I only need a policy for 30 years. After that, I should be self-insured because I have this money saved up. Okay? Now, here's what we know as a fact. The average 401k, IRA, and things like that in America is about $180,000. Very few people have $1 million saved up in investment. Okay? And this is where all these people who are selling this product, they are highly uneducated. They don't take extra courses. They don't go to seminars. Okay, they are pretty much an echo chamber. They're repeating whatever somebody else is telling them. They don't know. Because if you tell someone, you're actually hurting your clients in the future. You just don't know it. Because if you're pushing somebody in the direction of getting something that's temporary, which is a term, okay, the time that they needed the most is not going to be there. Whereas in the other direction, where it's a permanent policy or IUL, is guaranteed to be there because it's going to last them all the way to age 100 plus. Some IUL, again, if structured properly, can last you all the way to age 120. That's longer than most people will ever live. So to me, I think a lot of these agents who are out here, and if you're watching this, okay, I want you to either, I want you to message, if you say, hey, I ran across an agent that's trying to sell me a term. I want you to message that, because a lot of these people, like, they work for companies that don't offer anything else. So it's a lot of self-interest there. Okay? They want you to buy their product, because if you don't buy their product, they can't eat. It makes more sense to work with an agent that sell multiple things, or that work for multiple companies. You understand? So at the end of the day, why would you direct why would it make sense to you? You know, even if you put yourself in the position of a client and think to yourself, if I buy a term policy for 30 years, right? And I got to invest, put money away that's going to last me for retirement. That money has to take care of a multitude of things. One, income for me to survive off of. And then two, any health situation that may arise. Okay? And we know that the most crippling thing that can hinder a person's finances is a health crisis. A health crisis will get you bankrupt. This is the reason why they offer long-term care or life insurance with living benefits, which I think life insurance with living benefits is a whole lot better than having a standalone long-term care policy. Because the problem with long-term care policy, and you guys can do your research on this, is number one, it is a reimbursement system, which means that whatever you're going through, you got to show receipts that this is what you paid out, and the insurance company give you money back as a refund. Okay? Number two, with long-term care, you have to use a licensed practitioner for your care. So your daughter couldn't take care of you, your child couldn't take care of you, the neighbors can't take care of you. It has to be a licensed practitioner. Now, with that being said, if it's a licensed practitioner, it's going to cost you. It's going to cost you. Okay? So, but with living benefits though, it's a different scenario. So a lot of these companies don't, most of them don't have life insurance with living benefits. Okay, very few companies have that package in one. But what life insurance with living benefits actually does is same thing. It kind of functions like, again, like long-term care. But the only difference is, let's say you go to a doctor, and let's say you had a heart attack or you had a stroke, right? All the doctor got to do is give you a letter, and that stating what happened to you. You now send that letter over to the insurance company, and the insurance company cuts you a check based off of your death benefit amount. So for example, if let's say what you had was a critical illness, and critical illness is things like cancer, heart attack, stroke, dementia, renal failure, Lou Gehrig's disease, stuff like that, right? You have access to 90%, up to 90% of your death benefit. So let's play the numbers. Your policy is 1 million. Okay? You had a stroke, let's say a massive one, right? You now have access to $900,000 lump sum from your policy. Okay? You don't have to take the whole 900,000, but that's how much you have access to. Now, think about it. If you didn't have the life insurance with living benefits, and you were solely living off of your investment that agent told you to do, you will evaporate your income quickly. So, you know, being around for 17 years, right? A lot of what I know is based on a lot of schooling. And when I say schooling, I mean you got company training. After a company training, I, out of my own pocket, every single year, go to conferences and seminars that talk about the insurance industry and what's new and what they're offering and the benefits and stuff like that. It could cost you in the thousands. Most agents are not willing to do that, but they want to come out here and sell bad policies to client. They want to come out here and be a part of an echo chamber, and they are massively wrong. They are massively wrong in most cases. You understand? So if you're dealing with an agent who's pushing you on term and trying to tell you that, oh, the IUL is bad, blah blah blah, this that or whatever, you may want to tell them to leave your house. Anybody, and I hate to say this, and please excuse me, guys, if you're watching this and you're non-African American, okay? Anybody who's watching this and you are African American or black or whatever, right? Because most of our community don't have assets or things like that. So most of us don't have businesses, right? This is one of the surefire way to transfer wealth to your family. Like is guaranteed. You understand? The term is not guaranteed because it's only for a specific time frame. After that, it's over. Then you have to bank on your life savings to hopefully have something left over when you die. But again, if you have $1 million saved up and you're 60 and you live to 85 and you're drawing out 60, 70 grand a year to live off of, that money is going to be gone by year 15 or so. So which means when you now pass away, your family gets nothing. This is not rocket science. This is not rocket science. So listen to this young lady. I'm hoping she's on. Hopefully she's getting a little bit of education, and maybe even reconsidering the company that she works for. Because if she's going out here, she said the other day that she reviewed she reviewed 173 IUL policies. I personally don't believe that, because if you're reviewing that amount of policies, that just tells me that you got a lot of time on your hand. You understand? You're not out here working and servicing clients. So, but if you're dealing with an agent like this, you might wanna seek a second opinion, because this will defeat your family. I'm just sorry. You understand? I'm not saying everybody should be in an IUL. No. If your budget doesn't fit it, hey, get you a term policy, get you some form of protection at least. Okay? But just know that it's a time frame. It's not meant to hold you down forever. It's actually literally temporary insurance is what it is. A term is literally a temporary insurance. That's it. And it's supposed to be temporary until hopefully you get your finances in order, lifestyle to get better for you, and now you can transition from the term to a whole life or to a permanent, policy. That's what it's supposed to do. But most of these people will tell you, oh, buy a term and invest the difference. And we know most of their clients who I've met don't invest the difference. You know what I'm saying? So in a way, the IUL kind of like force you to invest, okay, based on the premium that you have to pay. You understand? So yes, the IUL is going to be a little bit more money, okay, because remember, there's a couple of things going on in that scenario with the IUL. One, you have a fixed premium, and the policy that will last you it will outlive you. Okay? The average lifespan for a man right now, I believe, is 79 or 81. The average lifespan for a woman is 85 to 87. Okay? So, no term policy that we know of is going past the age of 85. Okay? So, what happens when you're a person who lives longer than that? So these are things that I kind of want you guys to consider when you're meeting these agents who are telling you or giving you this bad information. You understand? Like, again, I mentioned earlier, cheaper doesn't necessarily mean better. Okay? And I'm going to say this, I'm going to close out. What the insurance company is doing is this. When an agent go into a house and offer you a term policy, the insurance company are betting you that, hey, we know that you will live longer than this policy. And what you're doing is saying, hey, insurance company, take my money because I know I will die before this policy. That's a crazy gamble. That's a crazy bet. That's a crazy bet. If you're 30 years old, 40 years old, 50 years old, and you buy a term policy, there is a 95% chance that you will outlive that policy. And it's a simple Google search. You guys can Google this. Only 2% of term policy ever pays out. Only 2% of term policy ever pays out. What's the reason for that? Most people outlive the policy. That's the main reason. Nothing else. Nothing else. So listen, hey, you guys know who I am. If you're watching this and you don't have any life insurance and you need an agent, or if you don't have any life insurance with living benefit, which is huge right now, because let me tell you this, I've had friends that have cancer and it's come in handy for them. You understand? Recently I had a client whose father started to fall sick. They just received their check almost 2 weeks ago. Okay? The average assisted living facility in Maryland, and you guys can check your state, but in Maryland it's $110,000. The average nurse aide, which means I don't want to go to an assisted living home, I want somebody to come here and take care of me, It's about $4,800 a month. A month. So does your life insurance have living benefits? Is the question that you want to ask yourself if you have life insurance. If you don't have life insurance and you need some life insurance, feel free to text me at 443-208-5480. That's 443-208-5480. Or you can email me at evolve@TitanEvolution Group, and I'll get back to you at my earliest convenience. But outside of that, hey, listen, you guys have a wonderful and blessed Sunday. Love you guys. Stay safe and talk to you soon.